everyone, and welcome to another episode of Shitty TAs be Shifty, where the TA is shit but not quite bad enough for an open mouth thumbnail. Thought I'd give this whole audio thing a try. I dug up a microphone that I had a while ago and haven't used since my guitar days. So I thought, yeah, fuck it, give it a shot. So, let's crack into it. So, in the charts, where are we right now? Well, you would have seen in my previous post, if you do look at my posts, I did have a channel drawn. It's on the logarithmic chart on the 1 day. So I had a channel drawn just with two, line tools. I decided to replace that with a Fibonacci channel tool, which makes a lot more sense. I don't even know why I didn't think of that before. But here it is. So we'll ignore this one here for the time being. Right, that one going down diagonally there. Let's focus on the macro here. We're focusing on the 618 for now, the golden pocket region. And we're focusing also on the 786 retracement region. And we'll get to that in a bit. I've got to try and keep this video kind of short if possible. Alright, so long story short, we pretty much bounced off the bottom support line of this channel. We did wick through, but where did that wick end? Almost at the 618. So this is acting as a pretty decent support for the time being. As you can see here, we did have about a month or so bouncing off the 618 area, the golden pocket, I like to call. Obviously we didn't know this was 618 back here, but now we do. So it's significant. Going into this side, we have a monster wick coming down here. Actually, what we can do with that wick is introduce Mr. Big Wick. Just scale him down to make it a little more realistic, Actually, you know what? No, make him a little bigger. There we go. Mr. Big Wick's wick hit the 618. So, bounced off there. I personally might call that the bottom. Alright, and that's for this reason here. So I'll show you now. Do a bit of an Elliott wave count. Excuse me. That's that one. We need that one and that one. And we also need an ABC correction wave, which I think is that one. Yeah, there she is. Right. So I think personally, this is the A, that's the B, that's the C. To me, that makes sense because we are respecting this channel. Now, if that is correct, and if this Elliott wave count is correct, then we should, in theory, have a wave 5 impulse up here to roughly 120k. Now, this matches dead on this fib line here, right? That green one going across, which makes sense. Also matches the logarithmic regression charts that you'd see on channels like Benjamin Cowan. I know I've mentioned him before in my posts, but you got to check this guy out. He's really good, has a mathematical approach to this. Very, very well worth watching. So I highly recommend this channel. I have no affiliate with him whatsoever. I just really, really admire his TA approach. But according to his logarithmic regression charts, this is pretty much where he thinks we may end up, and that actually matches the Elliott wave count that I've got here. In theory, potentially, this is what it might look like. Maybe not, we've already kind of debunked that there, but it could go up, you never know. Right, so if we're going to be optimistic and we're hoping for a relatively quick move up, this is where we could go. Now, if the 618 don't hold, what is the option? Well, 786 is down here, and it's sitting, we'll call it 21.5 grand, down to about, I'd call it 19 grand, probably even down to 18, I'd say. You can probably go down to the bottom of this area right here. That would make sense. Okay, so that's retracing to the 786 region, which Bitcoin has been known to do. Guys, keep in mind, Bitcoin's got OCD. Okay, Bitcoin likes to finger things. It likes to finger Fibonacci levels, and it likes to finger the 618. And if you can go a bit further, it'll finger the 786. That's just what it does, right? That's normal. So me personally, I don't think we're in a bear market just yet. Reason being is we haven't had a cross here. So that yellow one there is a 55 EMA. The Sasha Grey EMA here is the 200 EMA. This is on the daily, right? Sasha Grey does like to be on top from time to time, and if she does change positions right here, we are going to get dominated, which is not good. But so long as the Sasha Grey of EMAs remains below the 55 EMA and we're on top, we should be pretty decent. Now in the event we do drop down, I have this here, okay, this mock channel at the moment, and let's get rid of Mr. Big Wick. Now at the moment this channel is not confirmed, and it won't be confirmed until we have a third touch point, either here or here. Now general reasoning behind this is that even with any pattern, right, a pennant for example, or a channel, usually you'd confirm the pattern when you have 3 touch points at least on one side, preferably on both sides, but at least on one side. So in this case, 1 touch point, 2 touch points, yet to have a third. 1 touch point, 2 touch points, still yet to have a third. So we can't technically confirm this yet, though we can say the median line here is being respected. Right there, right there, right there, and all of that. So there is significance to this at the moment. This is being respected. And if we do continue down this channel, in theory, right, we maybe could end up with something like this and eventually down to the 786. Maybe meet it down here somewhere, right? I'm not sure we'd break out of this channel here. Doesn't make any sense if we do. I think maybe we'd continue this channel, possibly retrace to the 786 before trying to find a leg up by breaking above the median line first and then through the 618. That is a bearish scenario, right? And even then, I think that bearish scenario is still temporary, right? I still think it's temporary. I don't think we're going to see a straight drop down. If we do, I'll be very surprised. So looking at that, right, we've got this little reversey wick here and we're moving up. Now, so far we're respecting the macro channel, so let's focus on that for the time being. This one here, like I said, unconfirmed until we have a third touch point either there or there, preferably both. Right, so for now let's focus on this big one here, and we'll focus on the 618 being our support. So currently we've seen a bit of a pump. So whenever you see a candle that looks a bit like that one there, see that? That means reversal. Now, don't know how far the reversal is going to go, but it means reversal. In this case, we hit that 21 EMA, the red one, right? We bounce back down. Now you can see over here, we've been consecutively hitting higher value EMA. So we started off hitting that blue one there, which is the 8 EMA. Then we moved up and hit the 13, which is the purple. Moved up after that, we tried to hit the 21, missed the target. Now we have hit the 21. Right. Now generally I'd say that's a good sign, because at the moment, if we zoom in, we are currently floating above both the 8 and the 13. And you can see they're having a bit of an uptick. Now if we continue on this, we could possibly end up above the 21. That would be really good, because that's a significant EMA level. Right? This is an EMA level that the bots chase. Bots line up here. They line up here to short, they line up here to long. There and the 55. They also use the 50. 55 is actually a Fibonacci number, that's why I like to use that. And then you got a 200. Right. Now I've said before in previous posts, when the EMAs are spread apart like this, they're harder to break through. Okay. When they're closer together, they're easier to break through. This is on the way down, right? On the way up, it's harder. So on the way down, right, when they converge, right, you do get more resistance because you got all the EMAs hitting together. But once that resistance is broken, it's far easier to punch through. And you can see that right here. They've converged further, and then bang, right? Then they form a stronger resistance when they're all together, and they fall. Now here, they're spaced apart. This is like trying to climb a ladder with really spaced apart rungs. It makes it more difficult, right? But when you do get above a rung, it's easier to hold it as support. I'm hoping this makes sense to you guys. So eventually, if we do manage to continue price action up, we do find support at 21, then we find support above the 200, those EMAs will close together. And yes, the resistance will be a little tougher, but when it does break through, it'll be more explosive, right? So not that it's easier to break through per se, but it's easier to have an explosive move through once a certain part of it has been broken, namely the 21 and the 55. In this case, the 200 as well, because the 200 is actually in the middle of them all. So in this case, it is a bit of a pickle. You've got some major EMAs sitting right here. No one gives a shit about the 34, the orange one. It's just shit. The only time it matters is when there's a Fibonacci level in between, which is right here. So you could expect very strong resistance in this zone, this green line right there. You got a 200 EMA, 34 who gives a shit about it, that line, and the 55. That's going to be very tough to break through. But if we do, bang, it's going to be explosive. Right, it's going to be very explosive. Now, looking at this reversal, we can now move on to the final part of this, which is the indicators. So you can see here that I've had this resistance line drawn on the RSI for a while now. Right, it's like a little median line. Currently we're above it and we're holding it. Right, sort of. Let's hope we can hold it, because in my books anyway, we did have a bearish divergence for quite a while. You can see that there. High, lower high, lower high, lower high, lower high, lower high. Now we're on par with that last lower high, and we're on an ascending support with 4 confirmed touch points at the moment, or 3 really. That one's almost a touch. Just a tip. So I would say usually once a bearish divergence usually is kind of negged out once you go into oversold. You can generally count it as being reset. I personally don't count it as reset until we break that ascending line, preferably after being oversold. So we have been oversold, 1 check mark. We're currently above that median line. If we hold it, another check mark. This is what I want to see break. This here. When that breaks and we retested a support, we're off. To me, that is an absolute bullish signal. Same with the MACD. We've got this yellow line right here, and I did mention in my last post that the MACD looks like a confused lesbian, and it does. I'm not sorry to say that. It looks like a confused dyke. Why is that? Because it doesn't know what it wants to do. It's being all twisty. The histogram is barely wanting to make a move. It's barely shifting, right? It doesn't really want to go anywhere, and it's kind of bouncing off this line that I've drawn here. So what I want to see, this break above the median, which is right there, and the histogram break above that yellow. Okay. Now the distance from here to here would be equivalent, more or less, to the distance in the RSI from here to maybe just above here. That would give us a run up to the 55 EMA, I think, right? Breaking above that median line should, in theory, put us above the 55 EMA. That's where we want to be. We want to hold above the 55 EMA. We want to hold this green line in the macro channel, and from there we can start making our way above these fib lines, right? So once we get above here, this is what I want to see. I want to see that, and then that, and then that, and then that. Okay, this is the kind of thing I want to see, right? I personally don't want to see it shoot all the way up. To me, that's not a good sign. To me, that's bad. That's no good, because when you shoot up too quick, what's going to happen? It's going to end up like a bull trap, right? We may make it to here, probably won't set an all-time high, and we'll come back down. So that'll, to me, possibly confirm a bear market, where in a bear market you usually have a blow off top, which in this case we don't really have a blow off top, but you know, it is a top at the moment, and it'll come up again, give you a last chance to exit the market before dumping. I would rather see it slowly go up, make its way up, kind of like these Elliott lines I've got here, like that. Slowly make its way up over time to hit that 120k. Right. So, point in all this, I would say, the ultimate bullish scenario: we bounce off this bottom channel, we continue slowly going up, making our way above the EMAs, making our way above these fib lines, and slowly but surely reaching our 120k target, possibly even further. Got the absolute max I reckon box, could go there. Top of that's sitting at around 176 grand. It's possible. Now, before I flick this off, if you're wondering what this level here is, this is the fib extension, right, of the wave 3. So we're going to take a fib extension of the wave 3, we'll measure from the bottom of the wave 3, from the dip to the tip, as I like to call it, down to the bottom, and that gives us a fib extension of roughly 120k, right there. And the 2618, if we reach there, that happens to be 177k, which, if we do continue as a blow off top, which would make sense in this case, because it would go straight up from there, it wouldn't just take its time and go sideways, would match the top of that channel, and would be almost at a round number of 180 grand, which is a psychological number. So, I hope all this helped, hope it makes sense. If you do prefer this over my written posts, let me know. This does take more effort, so I personally prefer the written posts, but I can get more info across in these for those who are willing to listen, maybe even watch. Don't get wicked, and free Palestine. Free Palestine. If you don't agree, more than welcome to unfollow. See you guys.